The retracement in the Nasdaq took us from 7,700 all the way down to 7,400, from one round number level to the other. We did overshoot the trend line. This happened to us in AMD and Amazon and some other names like NVDA. But we are seeing, later than expected, the sharp pullback down away from our resistance target and already into support plays. I want to draw your attention to 7,400 in the broader Nasdaq index as we talk about these names. A couple things to note. The market is in an uptrend. It still has higher highs and higher lows, rising moving averages and rising trend lines, but it does have extraordinarily high volume as the market sold off and as key tech names were hit today and yesterday. So do watch this as a critical pivot that the Nasdaq has odds to bounce up and keep these trend motions going, bouncing off of support levels. But if we do see a breakdown, that could trigger a liquidation event, probably to about 7,200. So we're right at the midpoint of those two outcomes. Going to favor the bull, but prepare for the bear. Now, just take a look at individual components. We'll start with the broader XLK. That's our technology ETF. It also pushed down away from its 76 per share ETF level to about 73, which is a price and EMA target. Now, taking a look at individual components, Microsoft might not be the most fun, thrilling, exciting stock, but it still has our higher high, higher low trend line pattern and some additional bullish buy trades off of support pivots. For Microsoft, we're looking at about 107 per share, just above our 106.50, which is a price pivot and the moving average. That's our key spot to watch for Microsoft shares. If you're going to play the bounce outcome, a bullish bounce up away from 107.50, 108 per share to keep this trend going, we don't want to see it under 106.50 and then 106, because that could trigger a liquidation event into a downside sell swing toward about 102.80 or 103. We'll keep that thought process going with Amazon. That, like a few other names, overshot our upside targets, 2,000 per share, and the upper rising trend line with a couple of days above it, and to be rug pulled a couple of days after we expected it, down toward our price and moving average pivot. And that's about 1,930 or 1,925 per share. Again, looking for any type of bounce to occur Friday. Don't forget, we do have our jobs report or monthly unemployment report to come out pre-market on Friday. So we'll put that into context of whether the market bounces off of these levels or pushes a little bit lower to break through them, triggering a larger sell swing. All right, that's going to be Amazon, and that pullback or fade away from support. Apple also caught a fade, a little sell swing from 230 per share, and it's a little bit above the moving averages, but Apple was overextended well beyond these levels. So it's okay to see a pullback here, and quite expected, especially after these little reversal candles and a bearish engulfing, or if you will, a Pac-Man day. So we're going to watch these levels at about 221 or 220. We do not want to see Apple, if you're bullish, if you're bearish you do, beneath about 217.50 per share being a price pivot and the 20-day exponential average. And we'll finish up our pullback talk, retracement talk, fade talk in NVDA. Look for this a couple days ago, got one little pop and then rug pull to the downside. Again, like the Nasdaq, like NVIDIA, like some other names, we expected a sell swing into resistance. We got one little pop, one little ouch day, and then the pullback occurred. That's going to be the broader picture. But NVIDIA also pulls back away from its pivot at about 285 per share. It's playing into, if we zoom in on it, the 20-day exponential, a price pivot, and our midpoint target at about 270 per share. Again, if you wish to play a bullish bounce outcome here it is for NVIDIA shares, because the pullback we expected has transpired. 1 day late, but pullback nonetheless. And like the Nasdaq, beneath 7,400, if NVIDIA falls beneath this 270 pivot, you'll see it sell to about 260. That is the pullback plays. Two names to keep a watch on as we go through Friday and into next week is Facebook and Google, but first Facebook. Earnings and some bad news took this stock from $220 per share instantly down to $170, which is a mega price pivot, and a couple of bounce plays, a range action, and now we see a break under $170 per share. At the moment, that has resulted in a liquidation event. And if we drop down to a 5-minute chart for Facebook, we see how persistent and relentless this selling pressure or liquidation was beneath the 170 support level. Note that bulls tried to push it back into here on a second retest. Once they lost the game there and the break under 168, it was over, lights out for this intraday opportunity. And it gave us a trend day down in today's session. And we'll finish with Google. Now it pulled back. It wasn't really trading up to the highs, but its resistance spot was 1,300 per share. Over the last couple of months, it has played ping pong or back and forth range behavior between about 1,220 and 1,290 per share. Low to high, high to low, low to high. And now we have a break beneath not just 1,220, which is a price pivot, but also 1,200, which is a round number spot to watch. Here's our hourly chart. And again, the 5-minute chart on Google, just to show us how this stock behaved on an intraday basis with the initial liquidation swing beneath 1,200. That was Wednesday. The rally back to retest it from beneath. And now the push again down away from it. And that pivot's about 1165. So we'll be watching these levels. We'll finish back with the Nasdaq itself at 7,400. Other key stocks into support levels. Two stocks, Google and Facebook, breaking support levels and threatening additional short selling pressure as we play out the jobs report tomorrow and into next week. Be safe, TheoTrade. This is Corey Rosenblum with the Theo Night video for September 6th, 2018.